Well, other numbers out this week show that U.S. home prices touched another record high in April, but price growth is cooling. In a measure of prices across 20 cities, data from S&P CoreLogic Case-Shiller show that home prices rose 6.3% in April from a year earlier. That's less than a 6.5% gain in March. San Diego had the biggest gains. High mortgage rates and low inventory are keeping growth in prices down. Well, for more on the path forward for U.S. housing, I'm joined now by Ken Johnson. He's a real estate economist at Florida Atlantic University. Thanks so much for joining us on the show, Ken.
I'm glad to be here, Gerald.
So I want to start by asking you for your reaction to those latest housing reports. Sales are down, prices are up. How would you rate the state of the U.S. housing market?
So one of the things that we typically see when we reach the peak of a housing cycle is exactly what you just described. Fewer sales, prices flattening out. So we're probably nearing the peak of our current housing cycle. I'm not as worried. I don't think we're going to have a crash this time around like we did 15 plus years ago, but we're probably looking at a prolonged affordability crisis.
Now, you say we are approaching the peak of this cycle, but new findings by the Bank of America say that the affordability crisis plaguing the U.S. market is unlikely to improve before 2026. Do you agree? Are we in a rut here?
No, that sounds very reasonable. Even if we do get some sort of price relief, it's not going to be a dramatic fall in prices. I think you'll see our prices will move laterally as they move back towards the trend. So we're just not going to see much change in price, but prices are already high. Mortgage rates are already high. So affordability should continue for an affordability issue should continue for quite some time.
I mean, everyone can't help but talk about mortgage rates. Is that predominantly to blame for all of this, or are there lots of other factors we should be looking at, really?
There are lots of other factors. What's driving prices up? It's a supply and demand issue. We definitely have a supply shortage this time around, but mortgage rates are clearly contributory to this, and we shouldn't be expecting any mortgage relief in terms of rates anytime soon either, until our yield curve goes from being inverted back to a normal upward sloping yield curve. We don't talk much about that. That's when you'll probably see the rate cuts come from the Fed, when the yield curve goes back to a normal shape as opposed to being inverted.
So when do you predict home prices coming down? What needs to happen? You know, all the gears in motion for this to finally be able to kind of go, okay, you know, it's finally cooling again.
As a general rule, I don't expect prices to come down. Last time around was a really unique situation. A lot of things came together where we had this huge oversupply in homes thrown on top with our foreclosure crisis thrown on top of that, and we saw prices fall precipitously. The ingredients just aren't there. The perfect storm just isn't there this time around. What will probably happen, as it's happened many times in the U.S. in the past, is that we'll see home prices stop growing at a phenomenal rate, and the long-term trend, they'll catch back up, and we'll get back on the average appreciation rate. This will take some amount of time, however, but I do not expect to see massive losses in equity like we saw last time around.
Did the pandemic play into any of all of this, Ken?
Absolutely. We had to do something. We had to throw money at a problem. Now, the argument can be, was it too much or too little? I fall on the side of I think it was too much. That had a lot to do with increasing demand right now, because think back 4 years ago, we had lower mortgage rates and lower prices. Now we're slowly but surely, all that stimulus is working its way out of the marketplace, but prices are up and interest rates are up.
And of course, the Biden administration announced just this week a new $100 million effort to increase the supply of affordable housing. How do you see this helping?
I worry about most of the affordable housing, especially on the rent side. But if we look to the buy side, we're looking at how to create affordable housing. But if you look under the hood at these particular suggested policies, essentially it's on the demand side, inspiring demand. We have a supply side problem. I don't think it's wise to be increasing demand in the face of currently high prices. It will only drive prices up. We need to be doing something on the supply rather than the demand side.
So I have to ask, Ken, because, you know, I'm often reminded here of that proverbial American dream, you know, to own your own home with a lawn, white picket fence. Is that American dream still tenable?
It is, but there's also an alternative out there. Myself and a few other academics have been working for years, and we can show that on average, renting and reinvesting those monies that you would have otherwise put into home ownership will, on average, create slightly more wealth than owning a home and building equity. Unfortunately, many people, though, that rent, they fail to go ahead and reinvest. But there are alternatives, and you're seeing more and more the country or people around the country are going to renting and reinvesting. This is not going to turn America, however, into a renter nation. The idea of home ownership is still there because we love our homes. We love the amenities in our homes. We love the location of our homes. We love how the homes are tailored, that when we own it, we can tailor it to what we want as opposed to just taking a generic product in a multifamily setting, say, for example, multifamily rentals. So the dream of American home ownership is not going away anytime soon. One, we want to own them. Two, the supply will ultimately catch up. We've been here before. After World War II is a prime example. We'll increase our density, average number of people living in a unit. As incomes catch up, you'll see that density go back down, and we'll simply be at a higher plateau in price, but back to affordability.
Ken Johnson is a real estate economist at Florida Atlantic University. A pleasure to speak with you.
Thanks, Joe. Have a good evening.